Are you still holding on to that bias for euro strength then? And what do you need to see for it to play out?
Well, there's no immediate reason why euro should strengthen materially right now. In fact, actually, there's no material reason why it should go lower. It's already quite cheap.
Fine.
We've been this real annoying pain trade of a range. So euro-dollar between 112, 115.
We've talked about the vol, how low it is.
We're buying at the highs and we're selling at the lows. And then you're seeing that in vol, the Japanification of European rates.
Right.
At multi-decade lows, implied volatility for next year, both in FX and rates. So there's this frustration for euro traders. But I think if we get to the year end, what's going to rescue Europe is the same thing that caused the problem. The Chinese growth story. So in the second half, I think Chinese growth might boost back. We're already seeing the sort of total social financing pick up in China, and that sort of impulse from the authorities in China could see the trade balance for Europe improve and could lead to that export-orientated growth that kind of rescues euro, and we see it go higher towards the year end.
Jordan, have you been reading the Bloomberg this morning? Because you talked about the death of bond volatility. There's a story out today, PIMCO fearing for Europe's future. Let's show the chart. European price swings in the rates market plunging to the lowest on record. PIMCO saying that lower euro bond yields may last forever. You talked about the Japanification. That very quote comes up in this story. Are euro rates going to stay lower forever? Surely not.
Well, in fact, the phrase Japanification of Europe is kind of talking about what happened in Japan 20 years ago. In Europe, what we've seen is low yields thanks to the ECB's QE program. And just when the ECB wants to get out of the ECB QE program, which they have stopped now, and want to raise rates, we see a market pricing in very little chance of that because the data is not strong enough. So there's a cyclical story and a structural. The structural is demographics.
Yep.
You just type in the population of certain countries around Europe and the line chart's not going up, it's going down. We're seeing declining populations around Europe and also the aging of demographics. So that leads to excess savings, and that's the sort of story that is the Japanification of Europe. But when it comes to bond volatility, at some point it will go up. When the ECB does decide to raise rates, that's when we could see that. But is that this year? Is it next year? We think next year. But we need to see that growth data pick up in the second half.
So vol will go up, but how much can rates actually go up? Because I was questioning the sort of point that lower euro bond yields may last forever. Where do we see the 10-year bond yield by the end of the year? So
in terms of where we see it, it's definitely higher than where it is now. We're approaching negative territory on certain parts of the long end of the curve. Like the sort of range for 10-year bonds, 40 basis points, is not really that big of a call, considering where we're trading now. It's hard to see it going beyond that because the market's not going to price an aggressive ECB hiking cycle. So you're right, in terms of long end rates, it's pretty tricky.